Alright, so in this video we're going to be making the income statement. So it's going to be very simple because our budgeting software, YNAB here, pretty much gives me an income versus expense statement, which is basically the income statement, but I'm going to make a few changes to it. One of the changes is we do not track this cash flow tracking category as income or expenses, so we're going to remove that. Okay. And the second thing that I'm going to do is add in taxes as an expense. It makes it a little bit, the income statement, a little bit more complicated, but I thought it's important to see how much the government is taking from our paychecks to do all the great things that they do, right? So you should feel really good about that. All right, so we're going to just go ahead and start, right? We can look at the handout as a guide to making the income statement. So again, it's captured over a period of time. We're going to do it for the month of June, and then it's just a list of all the income that I have. All right, so that's pretty simple. I'm going to start with income, and then we're going to put June 2020. Okay, and let's list all the income. So I have interest, and then I have salary. And that's it. That's it for income. So for the interest, I'm going to put the amount that it is, put 0.14. I like using the accounting, what's it called? The accounting format for this stuff. Because it just looks nice. Alright, so for salary, I'm not going to actually use this number here, because I'm going to use the gross salary. And the gross salary, I have it written down for June, is $2036.39 plus $1764.72, $3,801.11. So that's it for my income. And now I can say something like total income, just the sum of all this up here. Okay. So sweet, that's my total income. Pretty easy. So now let's do expenses. So for expense, I can do two things. I can list all the categories out: rent, health, groceries, insurance, or I can just put them all as necessary and important and everything else. I suppose it would be nice to have a kind of like a breakdown of it, but since a lot of these things, like this is not going to change, this is not going to change, well, very much. Well, this will change. This is not going to change, I mean. This is probably not going to change very much. And all these things are probably not going to change that much. But, you know, for now, let's do it that way. So we're going to have rent, we're going to have health, groceries, insurance. Then we're going to have other. It's a funny one to start with. Dining out, subscriptions, interest, car, and total expenses is going to be the sum of everything up there. So let's fill it in. Rent, 1100. And I'm going to be putting all of these as just positive amounts, okay? Because I don't want to type in a negative every time I put the number in there. This is the most hardest part of doing your finances, is copying numbers, moving the pixels from one place to the other. So the other is a positive amount, so on this I need to put it as a negative amount. So, does this number match that number? Yes, it does. Yes, it does. So now we got our net income. And the net income is the total income minus the total expenses. And, oh, Why is it so high? That doesn't match. We forgot to add in the taxes. So I need to put taxes in its own special category up here, because the taxes that I paid for June were 418.82 plus 344.79. There we go. And now this net income matches. Total income, total expense. There's my net income. Like I said, taxes are probably going to be your biggest expense outside of rent. And if you're not making your income statement like this, you're kind of oblivious to the fact of how much taxes you're paying. The history behind why taxes are withheld from your paycheck directly is a very interesting one. It's a very deep rabbit hole, an interesting one that you can read into. The government didn't always used to take out taxes from our paychecks directly. We used to pay them every single year on tax day. Tax day is coming up here. So in the olden days, in the old times, what we would do is we would, prepare to pay taxes. Everybody would pay their taxes one time a year, and that's how the government would get their money. But at some point, the government realized two things. One, that people were probably not very good at budgeting, and a lot of people didn't pay their taxes because, well, they didn't have the money. So they would end up on a payment plan or something, I guess. But the second thing is that people became conscious. Like when you see something and you have to pay something, you become a lot more conscious about the fact that you're paying that thing, right? So if the government wanted to increase taxes, then it would be very difficult for it to do it because everybody would scrutinize the hell out of that decision. What are you going to be spending the money on? What are you going to be spending the money on? Do you really need it? Is it really that important? And the elected officials would actually have to answer for what it is that they wanted the extra money for. Now it's super easy. Now you don't even notice it. If they want to tax you more, you don't even know. You don't even know. Because you just get, you get your money, you get your net take-home salary, your net take-home pay. You don't even see how much you get taxed. If you actually look into your what's it called? Go into your workplace payroll software, then you can see the taxes. But who's going to do that? Nobody does that. So it allowed the government to be able to raise money for stuff, maybe nefarious things, or things that the people wouldn't want to have or wouldn't have approved if they knew that the government was raising money for those things. So it basically encouraged wasteful government spending. And that's why we're in this scenario now, where we have an out-of-control deficit and a lot of debt. The national debt is pretty high. And I think it has a lot to do with that reason. But anyway, that's a rabbit hole that you can go down and read about. Look into the history of how income taxes were started and how they used to be charged at the end of every year and why they switched from withholding the taxes from your paycheck. Okay, it's very interesting. That's it for the income statement. That's it for the income statement. Now let's make the cash flow statement. Okay? So that's it. That's it for the income statement. In the next video, we're going to make the cash flow statement. That one's going to be a little bit more fun than the income statement. It's not just copying numbers from one place to the other. All right, I'll see you in the next video. All right, guys, I need to make a quick update to this income statement here because I actually went and found that transaction. Remember that transaction that I was just talking about, the other here, where I got a refund for the thing that I sent? I actually went and found it. It was a cash transaction back at the very, very beginning of June for 25, right? So now I want to go ahead and just update that. So the way I'm going to do that, I'm just going to go into there, find that expense. So that was in the others category and change that to 2063. So now this number, right, the refund that I got cancels out the expense that I spent on it, and now it shows the true spending, my actual spending for this month. And so now we're all good and squared away. Okay, so see you in the cash flow video, guys.